Alright guys, DataDash analyzes the December crash and gives a warning. As long as we stay below 93,000, we have to expect that the next target at 74 is coming soon. On the other hand, crypto bunners convinced we're still missing wave B, and B stands for bullish. In the coming weeks, I see a lot of altcoins hit new highs. Two completely opposite views, but as you know, only one will survive. As always, I take the most bullish and the most bearish theses of the day and pit them against each other. And in the end, we'll see who's reading the market better. No more random opinions. Starting the day, we measure every single day by consistency, data, and results. Let's start with the bullish side. And today, Crypto Bundle with Sheldon comes in with a tactical view based on Elliott Wave theory. His thesis is that we're looking for a temporary bottom, getting ready for a strong rebound before the potential end of the cycle. The bullish signals that he mentions are structural. First, the ABC structure. Sheldon argues that the market has completed the 5 bullish waves and is now in the ABC correction. We've had wave A, the first drop. Now we're missing wave B, the bull wave. A strong rebound before the final wave C. He expects Bitcoin to climb back up to around 105 to 109,000. According to historical precedents, the current 31% drop, the previous cycle had a 51% drop halfway through before reaching new highs. So this drawdown is normal. Third, an imminent Altseason. He predicts that during this rebound to wave B, Bitcoin dominance will crash dramatically, just like in past cycles, triggering a real Altseason, with Ethereum potentially reaching $6,000 to $7,000. He's already taken action, opening longs on Solana and looking to buy Zcash spot around the $300 area. His conclusion is clear. We are close to a temporary bottom. Wave B is coming and will bring a strong recovery and an explosive rally from the altcoins in the coming weeks. On the other hand, we have DataDash, Paul Sampson, who brings a strictly technical and much more cautious perspective. Bitcoin started December with a sharp breakdown. The market is in extreme fear, and the dominant trend remains bearish. His analysis is based on crucial technical levels. First, the short-term line in the sand. To see any upside, Bitcoin absolutely must recover last week's low at 85,000. Only then can we aim for the middle of the range at 91K. Second, the key resistance at 93,000. This is the critical level on the tie. High slam. As long as we go and close below 93K, the structure remains compromised. Third, the bearish target is at 74K. If 93K is not reclaimed, the next target of the harmonic pattern is an aggressive retracement down to 74K. Also, note that Ethereum is on major support between 2.5 and 2.6 thousand. But if it loses that, the door opens to 2,000. His conclusion is clear. The trend is downward. Until 93K is reclaimed with a candle close, the bias remains negative towards 74K. So CryptoBunner says, this is a cyclical, standard correction. Let's get ready for wave B. It's a collapse in dominance. DataDash responds, the technical structure is broken. We respect the downtrend. As long as we're below 93,000, the target is 74,000. Cyclical theory versus pure technical analysis. Two completely opposite readings of the exact same price action. Now, let's get to the real data. My analysis. 1. The structure of Elliott waves often includes a strong counter rally. The famous wave B, the setup for a rebound, does exist. I give a point to the tactical bulls. 2. Historical meta-cycle corrections often lead to a final rally, where altcoins outperform with a drop in dominance. Another point for the tactical bulls. However, the technical levels from Dash data are objective. 93,000 is a huge resistance, and failing to reclaim it keeps the 74K target valid. That's a point for the bears. The sentiment is extreme. Fair, combined with macro factors like gold trending up, reflects the real technical damage and the current lack of momentum. Another point for the bears. Here's my summary. A relief rally. Indeed. Wave B is highly likely, given the oversold conditions, but it needs to break key resistances to confirm strength. Reclaiming 85K is the first crucial signal to watch. If the market fails to break through 91 to 93K, the 74K target from DataDash becomes the high probability scenario. Remember, I'm not rooting for anyone. I always compare the data, the flows, and the liquidity. See you in the next video. Thanks for watching. Bye.